Welcome to WCrypto.
Hello, my friends. Welcome back to WCrypto. Today, we're diving deep into Bitcoin's short-term price action, discussing the battle with the yellow downtrend line, liquidity heat maps, and whether we're gearing up for a dip or a pump. Stay tuned until the end to catch all the insights and strategies. Let's start with the 15-minute chart. Bitcoin has been struggling with the yellow downtrend line, which began on November 16th. Even though my strategy flashed a buy-long signal on the 16th, I decided not to enter because higher timeframes weren't giving off bullish vibes. As it turns out, that decision paid off. The price failed to break the trend line and instead tested the lower boundary of 89,500, not once but twice, on the 17th and 18th. Finally, on the 18th, we broke through the trend line at 90,800, only to shoot up to 92,200. Interestingly, my strategy exited here with a small gain of just over 0.5% in spot. However, the real-time drawdown during this action was negative 2%, so it wasn't an ideal trade for me. After ranging at this level for 5 hours, Bitcoin dropped again to 89,500 for a third test. This time, my strategy flashed another entry signal. Honestly, I feel like one of those notorious bears, like Capo or Gareth, despite us being in a bull run. It feels absurd, but I just don't trust this range right now. I have this gut feeling we're about to see a dip. But whether it's down or up, timing is the tricky part. On the bullish side, Michael Saylor has been buying again, and the ETF players are likely gearing up as well. Remember the Newton quote from my last video? The market can stay irrational longer than you can stay liquid. So for now, I'm watching from the sidelines, like a hunter stalking their prey. I'll wait for a flush out when the price looks weak, before jumping in for the next trade. Let's switch gears to the liquidity heat maps. On the weekly heat map, there's a significant pocket of short liquidity to the upside, starting at 92,700 and extending all the way to 94,700. This represents about $17 billion in short volume parked there. Are these traders hedging, or do they know something we don't? On the downside, we see around $7.6 billion in long liquidity volume, between 86,600 and 85,600. Below that, there's another $7.5 billion from 85,000 to 83,800. It's such an exciting setup. If you've got Bitcoin sitting in cold storage, you're rooting for higher prices, but as a trader, you're also eyeing those dips for the perfect entry point. It's a tug-of-war between long-term and short-term goals. And so where do you think Bitcoin is heading next? Will we see a flush out to scoop up liquidity below? Or is the market eyeing that massive short pocket above 92,700? Let me know your thoughts in the comments. If you want real-time updates on my trades, strategies, and analysis, make sure to join the Discord. And don't forget to like this video, subscribe to the channel, and hit the notification bell so you never miss out on the latest Bitcoin insights. And see you in the next one.